At Bitcoin Market Journal, we combine the time-honored tactics of value investing with the trailblazing techniques of crypto investing. Let's break down our game plan. We're making steady monthly investments. Think of it like a gym membership for your finances. We're investing in a diverse portfolio of stocks, bonds, and up to 10% quality crypto assets. And the key ingredient, patience. We're holding on to these assets for 5 or more years because good things come to those who wait. This strategy has delivered far better returns than traditional investors who haven't invested in crypto. We call them the non-believers. We've got 5 years of hard work and a mountain of evidence to show you why this approach works. You can read the thousands of articles, investor scorecards, and research reports on our website, or you can watch this quick video series. Today, the principles of value investing. You probably know this guy, Warren Buffett, the most successful value investor of our time, but you may not know this dude, Benjamin Graham, the guy who taught Warren Buffett how to invest. Graham was the author of this book, The Intelligent Investor, which outlined a new approach to investing, which became known as value investing. I'm going to oversimplify a few of the key principles of value investing in this short video. First, value investors look for companies that are providing real value. So when picking winning stocks, and we're only talking about stocks now, not crypto yet, value investors look for excellent companies with excellent financials, great managers, and a lot of room to grow that are providing some valuable product or service to the world. Value investing. Value investors believe that investing in the company is like buying the company. So value investors say, would I be willing to buy the entire company? This helps us say no to a lot of potential investments and yes to a precious few. Value investing requires both quantitative and qualitative analysis. Quantitative looks at the numbers behind the business. Qualitative looks at our judgment behind the business. And you need both. So the numbers may be great, but the team might feel a little bit sketchy, so we pass. Or the financials might look great, but the business is a mess, so we pass. You need both. Value investors buy companies when they're on sale. It's not enough to find a great company. You also want to try to buy it at a great price. Like investing in real estate, you want to look at comps or comparable prices of similar companies to make sure that you're getting a great value. Finally, hold for the long term, 5 or more years. The point is not to get rich quick. The point is to get rich and make it stick. The US stock market on average has grown by about 10% per year over the last 100 years. Good value investments should grow even more quickly than that, especially if we've done our homework and we hold on to them for the long haul. So this is value investing for traditional stocks, but our view is that crypto works in a very similar way. This is totally different from how most value investors think about crypto, and we'll explore that key difference in our next video. Keep watching.